Hi, my name's Rupert and I'm Head of Insight and Communications at Brego. Welcome to the December 2025 Brego Auto Intel broadcast, in which I'm going to review what happened in the UK car market during the month of December, along with a short summary of the economic and political position that has influenced consumer behaviour during the festive period. So let's get underway with a synopsis of the economy, first of all. And we've got to say that the last month was more stable than it was in November. And the government were in a more comfortable position following the palaver that was the build-up to the budget on November the 26th. Most importantly, the economy showed some positivity off the back of a decrease in the rate of inflation, which surprised many people by dropping to 3.2%, which was a 0.3% better than had been forecast. Now, that was largely due to prices for food and non-alcoholic drinks impacting it, but it is worth mentioning that the forecast is for it to rise again slightly as we head into the new year, but no panics, because I think that thereafter it will continue to drop. In addition to this, the Bank of England also decided to lower the base rate to 3.75%, which is now at its lowest level since February 2023. These two changes help to bolster consumer confidence, which did improve by 2 points, taking it to -17 from -19, although it seems that this confidence did not translate into greater retail sales in the UK, unfortunately. Not even the 4-point improvement in the major purchase index or the drop in the cost of fuel and in the increase in the instant access savings rate helped to boost things for anyone. Instead, consumers changed their spending habits and they looked to budget stores for their groceries over the festive period and gifts and so forth. And for larger items, they used buy now, pay later schemes rather than spending more money actually at the time. To quantify things further, Barclays Bank have subsequently issued a report that consumer spending fell by 2.3% during 2025. In addition to which, credit card spending actually fell, but by a much milder 0.2%. So not a brilliant picture overall. Let's have a look at what's been going on in the UK new car market. And this is data courtesy of the SMMT. Okay, so it's been a slightly better month when compared with December 2024. Although, despite consumer confidence improving that little touch, as we said, it didn't translate into sales. It was a month of heavy discounting and offers to actually get the sales across the line. Overall, new car registrations were up by 3.9% compared to the previous month, and the full year figure was up by 3.5% on 2024. Now, private registrations increased by a whopping 16%, and that does actually sound pretty great, but it's a market share of 35.2%, and that was 36.6% last month. So that's a bit of a shame, but there we go. Year to date, it was up at 4.5%, which is a 38.6% market share and 0.4% higher than in 2024. Now, fleet sales were nominally down by 2.4%. Last month, they were up by 0.2%, and that gave a 62% market share in comparison to the previous month's 61% market share. Now, year to date, it's up by 2.6%, with a 59.1% market share against 58.9% the previous month. Now, market share for the year is up by 0.5%, and that's a positive as well. So EV sales were up 8%, and market share for December was 32.2%, and that's up from 26.4% the previous month. And that's 1.2% up on last December, and year to date it's at 23.9%, and that's plus 26% last month, and year to date it's up by 3.8% on 2024. For plug-in hybrids, they were up by 32.9%. That's off the back of a 14.8% increase in November. And that translates into an 11.6% market share, marginally lower than the 11.9% in November. And for year to date, it was up by 34.7%. That's 34.8% the previous month. And the market share is at 13.9%. And year to date, 2.6%. Up on 2024. Now, petrol registrations down by 3.1% for the month, and that's sort of symptomatic of the consumers shifting towards the hybrid and EV products in the market. Diesel was down by 12.5%, that was minus 24% the previous month, and that's a 4.2% market share, and it's down 0.8% on last December. So when we look at OEMs who's been successful, the top three for the month were Volkswagen with a 7.93% market share. MG came in second place at 6.73%. That was Audi the previous month. And third place was Ford with 6.3%, and that was BMW last month with 5.89%. In terms of the top three best sellers, the Ford Puma, the Tesla Model Y, and the Volvo XC40. Now, the previous month, that was Ford Puma, followed by Kia Sportage, and then the Mini Cooper. There was only one Chinese model in the top 10, and that was the JQ7 in sixth place, which was exactly the same as the previous month. The top three sellers for the year, Ford Puma, Kia Sportage, and the Nissan Qashqai. And just to cover off from the Chinese brands on sale in the UK, MG took first spot with 6.73% of the market. That was up from 3.76 last month. BYD was second with 5.25, and the Chery Group took third place. That's Chery, Omoda, and JQ, and they were at 4.9%, which was up from 4.3% the previous month. Just as an aside, Tesla took 4.3% of the market share, and it was 2.5% last month. So let's move to the used car market data, and this is data from the Brego Whole Market data set, okay? Total adverts for the month were down by 4.6%. They'd actually increased a touch last month at 1.6% higher. But I think probably December is going to be the lowest volume of adverts in market. A lot of dealers do not advertise their full stock during December. So we're probably going to see that start to rise as we go later January into February, once the used car sales have sort of dropped the stock levels and they start to build up again. Pre-reg adverts were down by 1.2%. Now, last month they were up by 3.6%. That might come as a bit of a surprise given the time of year, and people often try to get cars pre-registered and done before the end of the year. But this level is 57.6% higher than it was in December 2024. So even with that little decline, we're still looking at an enormous increase over the same period last year. And just a reminder, there is a lot of activity out there to get cars sold. Some high-end premium OEMs are still offering over 25% in sales support on some of their larger, more expensive models. Trade adverts were down by 4.7%. Last month they were up by 1.7%. Are there really more cars available? I don't think so. I think it's perhaps a slowdown in sales, and dealers, as I said, have been reducing costs by advertising less cars. It's just this kind of juggling around that happens at this time of year. EV adverts were up by 4%. That's off the back of a 4.6% increase in November. And demand for used EVs is still being affected by the pence per mile pricing that is being implemented by the government, but not until April 2028. But it is having an effect now. I wonder how long that will actually last before everything calms down and we realise it's sensible, given that the government needs to raise money off the back of dwindling tax from the fossil fuel cars. But I also understand the government is considering dropping VAT to 5% on public charging, and that's in a bid to try and offset the high cost of charging an EV and therefore affecting desirability. Petrol adverts were down by 5.5%, and that was off the back of a slight increase the previous month of 0.4%. Sales were down by 11.8% for the month. And just for context, the drop in sales volume in December 2024 was 19.4%. So actually, when you're looking at those statistics, it looks like we're not doing too badly at all. Days to sale were at 43 for cars overall, and I think that's just symptomatic of the market conditions, as the consumers not really in the market buying cars. EV days to sale went up by 13.7 to 41, and that is 27.3 for the previous month. They are still selling slightly quicker than fossil fuel cars, though, and I do need to add that we've removed some of the outliers from that, some of the large electric and expensive electric and hybrid vehicles. Average used car price went up by 1.4%. That's off the back of a 0.9% increase in November, and now it's at 16,715. Whereas the average EV price was up by just 0.4%, 0.5% the previous month, and that now sits at 24,406. That suggests again that we've got some further market stability on pricing for EV product, which is positive. Let's hope that remains consistent as we go through perhaps a little bit of a period of instability. Some of the Chinese manufacturers are realigning their prices, and Tesla have also just dropped prices for, I believe it's the Tesla Model 3. So in summary, December performed really as expected by the trade as a whole. Footfall was lower and there were less inquiries, which did fuel that 11.8% drop in sales. But don't forget, that's much better than it was this time last year. Consumer confidence showed an improvement of 2 points according to trading economics data, but this did not translate into inquiries and sales, despite the motivation of a drop in both inflation and the bank base rate. From a pre-reg perspective, volumes dipped a little, although they are still 57.6 higher than at this point last year. Now we have a fresh start in 2026. Be interesting to see whether they continue to fall or whether pre-registration will need to continue. The wholesale activity has also declined during the month, and there were fewer buyers in the hall and online, although conversion rates did not drastically drop, but trade pricing did fall back a little. More auction vendors were spending money on cars to get them into a better condition in an effort to sort of maintain sales momentum, keep those cars moving, but also to minimize on low bids. And, it's worth talking to your remarketing partners this time of year because they do know what they're talking about and it can make a big difference. Chinese brands accounted for 19,330 new cars in December, and that equated to 12.8% of the whole market, whereas there were 1,031 used Chinese cars sold in December, and that represented just 0.4% of the total market. We've got to expect that to change, guys, over the next 12 months. So it'll be interesting to watch how those figures inflate. Anyway, I hope you found this a valuable update in what is really a pretty complex time. If you need or you want more detail, to be sure to read the Brego Monthly Car Insight Report, which can be found on the LinkedIn page and also on our website. And you can also just reach out to me and I can forward it to you. We've also started to post some insight and updates on our YouTube channel, which is called Brego-Official. So don't be shy to go across there. You'll see all the recordings from the last few months. Finally, I just wanted to reiterate that if you want to improve your market insight and your understanding of how the auto sector works in the UK and all those different nuances that make a difference, then you really need to speak to the Brego sales team. Andy, Safi and Nick would be delighted to show you how the Brego pricing and market data will help you to improve your understanding of the market, but ultimately increase profitability for your business. It's okay, they don't bite, they're just here to help and empower you. Thank you very much, and I'll see you soon.